Hey friends, in today's video I will be sharing some ways to analyze stocks. It's never been easier to invest in the stock market. With more and more user-friendly apps like Robinhood being used, more and more people are dipping their toes into the stock market. But if you're like most people, setting up the account may be the easiest part. Selecting and analyzing your stocks may be a whole other ballgame. To help you analyze stocks like a pro, here are a couple of things you should look at and why. First, PE ratio. PE ratio is price to earning ratio. You take the stock market's value per share and divide it by its earnings per share. Once you do this, compare it to the company's closest competitor and industry standard. Typically, you'd want your desired stock's PE ratio to be lower. Earnings per share is the second thing you're going to want to look at. The earnings per share is a portion of the company's profit that is allocated to each share. It's a great way to see how well the company is doing. You typically want to see the earnings per share increasing. This tells you the company is profitable and has money to reinvest or distribute to its stockholders. Book value. Looking at the book value is a great way to find hidden gems. Investors will look at the market price of a company's stock and divide it by its book value of equity. This gives you a price to book value. A low price to book value indicates that a company is undervalued and could be a great investment. Lastly, look at the return on equity. This is calculated by dividing the net income by the average shareholder's equity. A consistently increasing return on equity is a great sign to investors that the company is producing positive returns for its shareholders. There's no one perfect way to analyze stocks, but using these 4 metrics could help you get more comfortable deciding which companies are good investments for you. Spend some time understanding these metrics and choose your analysis based on your personal preference. If you enjoyed this video, be sure to like and subscribe to our channel for more.